Good evening, ladies and gentlemen. On behalf of the Advocata Institute and the Women's Policy Action Network, it's my pleasure to welcome you all today in celebration of the International Women's Day to closing the divide through women's access to finance. Over a year ago, with the support of the Kingdom of the Netherlands, we were able to establish the Women's Policy Action Network, or WPAN, which is a robust policy action group advocating for policy reforms aimed at enabling women's economic empowerment. During the course of its action, WPAN has mainly focused on 6 thematic key areas, which are labor legislations that affects women entry to retention in the workforce, gender discriminatory labor in relation to inheritance of property, taxes and tariffs that disproportionately affect women, domestic workers in the informal sector, financial inclusion, and care economy. To celebrate this year's International Women's Day, we decided to explore how we can utilize financial inclusion to economically empower women. Before we formally begin our event, I would like to inform all those observing Ramadan to kindly note that the arrangements have been made for the prayer room and iftar. If you would like to break your fast, please reach out to the Advocata team who will direct you there. To start off the event, I would now like to invite Mr. Murtaza Jafarji, the chairman of Advocata Institute, to welcome this gathering.
Good evening, everyone. Welcome for our event on Women's Policy Action Network. This, I believe, is either the third or fourth event under this theme. Let me give you some context. Advocata was set up as an advocacy organization about 6 to 7 years ago, and we have now developed a think tank element to our activity. It was felt that there was not a sufficient voice in Sri Lanka who fought for the case for liberty and a market economy. The left side was very well established, but there was nobody putting forward a counter argument, which was the genesis of why Advocata came about. And in our mission, basically, we have now developed our own research capability and policy development capability. The Women's Action Policy Network came about as bringing an umbrella organization to rally all the other women activists so that we could amplify their voice. And let me give you the context of why today's forum is important for the well-being of our country. I say this that many of you are aware that Sri Lanka had to restructure its debt because our debt was 128% of GDP. And I say this, that there is more than a 50% probability that we may have to do it again. And the next time we do it, the pain is going to be significantly more, because the first time we did it and we have not completed it, it was a very light restructuring. Now, one measure of our indebtedness is debt to GDP. And the only way that we can overcome this predicament is to grow GDP. Now, there are 2 ways to grow GDP. One is to increase the number of people working in the economy, and the second is to increase the output per person, or what economists would call productivity. Now, women are more than 50% of the population. But if you look at labor participation of the economically active population, which is about 16 million people, the male participation is 70%. The female participation is 35%. In countries like Vietnam, which has one of the highest, female labor participation is as high as 80%, almost equivalent to male. In East Asian countries, it's about 70%. In context in Sri Lanka, it's only 35%. So, one way of avoiding this predicament is to get more women into the labor force. And women have certain constraints, so not all of them may be necessarily being able to work in formal employment, and many of them will have to be in informal employment, including working for themselves or starting new businesses. Now, when I have been on visits to East Asia, I find that many of their women, maybe they are staying at home, but they're economically active. So, what we need to do in this country is to get more of our women, not necessarily in formal employment, but economically active. And finance is the lifeblood of any business activity, and therefore the connection between our general well-being as a country and the need to grow and today's forum, there is a direct relationship why financial inclusion and access to credit is important. Now, in my research, there were two items. I don't know whether the panelists will cover. One is that access to finance in a system which is highly reliant on collateral. So invariably, the family property is owned by the man. So when the woman goes to access credit, you have to give some collateral, and unfortunately the woman is not the owner of the most important asset the family has, right? Maybe some more progressive families would have co-ownership, and let's hope the panelists can discuss this, or even the audience, I'd like to know whether, but in most cases it's a man that has the asset. The second is the man that is in formal employment. So I have been on a bank for 9 years, and in their kind of lending, they are much more prepared to lend to people in formal employment because they have a visibility of income streams. But when you are working in the informal sector, or you're working for yourself, it's not necessarily easy to show a pay slip. So the estimation of your ability to service debt is difficult. So these are two huge issues that women will face in getting access to credit. So I'm putting across a pain point that I have, a question that I hope these panelists will try to come up with solutions to do. This is just a welcome speech, but I try to set the context. I believe next that there will be a video explaining about the Women's Forum formal network and their work. And I'm looking forward to hear the deliberations of today's activity. Thank you.
Thank you, Mr. Murtaza. Now, let's move on to a short video brought to you by the Advocata team on the impact created over the last year through Women's Policy Action Network.
PAN have accomplished incredible feats and overcome numerous challenges to ensure that the case for women's economic empowerment is heard by all. Let's take a look back at our journey. In early 2023, the Women's Policy Action Network was launched to bring about policy reform through advocacy for the economic empowerment of women. The vision we dreamt of was to be a network run by individuals committed to women's empowerment. Harnessing advocacy, collating research, and identifying key problem areas that have and will impact the lives of women were a few of the targets we were working to achieve. To ensure the nuances of this environment were captured, the team undertook a mixture of research and advocacy initiatives. After rigorous research on barriers to women's involvement in the workforce, the WPAN published 3 policy briefs on pertinent issues. Gender discriminatory land inheritance laws, labor laws, and social and digital infrastructures were key areas we identified as direct barriers to women's economic empowerment. Podcasts with key personnel were published to garner profound insight into issues faced by women. WPAN has also worked with those passionate about furthering women's empowerment by facilitating discussions on key topics. Thank you all for joining us on this journey as a Women's Policy Action Network. For more information on the work we've done, please visit our social media pages on Facebook at Women's Policy Action Network and Instagram at WPANLK.
I would like to invite Dr. Roshan Pereira to set the context for the rest of the evening. Dr. Roshan Pereira is a senior research fellow at the Advocata Institute and also the chair of the Women's Policy Action Network. She is a former director of the Central Bank of Sri Lanka and has over 20 years of experience in formulating and implementing both monetary and fiscal policy. She is also a board member of the Union Bank PLC and Senkadakara Finance PLC. Over to you, Doctor.
Thank you, Tatsani, and good evening, everybody. I think Murtaza has already set the context for today's event, but I will just sort of add to it in terms of providing a motivation for why we chose this as one of the areas to look at in terms of in this Women's Policy Action Network. So while women really account for more than 50% of the population, the human resources in this country, as you've heard before, they are highly underrepresented, particularly in paid economic activity and in the labor force. And with Sri Lanka facing a rapidly aging population, together with this recent wave of migration, there's going to be huge pressure on human resources. So while empowering women makes good economic sense, it is also important for the well-being of the individual woman, or individuals and households. So as you saw in the video, WPN has focused on many different areas, or the barriers, several barriers that women face in engaging in economic activity. Today we want to focus specifically on the access to financial services and how the lack of access to appropriate financial services prevents women from actively engaging in paid economic activity. So in the research, it is well recognized that financial development is important for economic growth. And there are lots of statistics to substantiate that. But there is also increasing evidence that greater financial inclusion is vital for reducing poverty and inequality in society. But what is financial inclusion? It is defined as the access and usage of affordable financial services, products and services. And women's access to financial services, especially digital financial services, could really hold a key to greater engagement of women in economic activity and in helping to reduce gender gaps. However, women face several barriers when they try to access financial services, such as higher transaction costs, and I think Murtaza alluded to some of those things. There are social and cultural attitudes that prevent them from being able to access financial services, and also the regulatory environment. And we will talk about these as we go along. But what has also been found is that greater access to digital financial services can help overcome some of these barriers by reducing the transaction costs, enhancing credit, by reducing information gaps, and empowering women to go into businesses, particularly on the e-commerce side. So they are really important drivers of financial inclusion. But unlocking this potential of digital financial services requires some underlying conditions that need to be fulfilled. Firstly, women need to be financially and digitally literate, or have greater financial and digital literacy. There needs to be a good, well-provided digital infrastructure. And also the regulatory framework that exists must create a level playing field, or the enabling environment for women to be able to access this finance. So I would go as far as to say that this digital infrastructure and financial literacy should be treated as public goods, much like we have for many years treated other forms of infrastructure and even literacy, which in the normal way we look at literacy. And we've treated those as public goods. So I think now we need to look further and even think of digital infrastructure and financial literacy also as public goods that need to be accessible to everyone in the economy. But when we look at the disparities that exist, so if you look at the existing state of play in terms of financial inclusion, despite Sri Lanka having a very high literacy rate, so we have a literacy rate of something like 93%, the level of financial literacy is still very low. It's only 57%. And this too may be an overestimation, because financial knowledge may not necessarily be effectively applied to our day-to-day activities. So we might have it in theory, but may not necessarily be applying this knowledge. But if you look at these numbers, and these are from the World Bank's Global Financial Database, Sri Lanka seems to be doing very well in terms of, and stands out in South Asia, as particularly in terms of access to financial accounts, or having a financial account, a banking account, because almost 90% of the population has a bank account. But again, there are some discrepancies between men and women. But in terms of the use of these accounts to carry out financial transactions, the percentages then fall off. There's very little actual usage of these accounts. And then transitioning from this cash economy or cash transactions to digital platforms, Sri Lanka does very poorly, particularly if you compare with our East Asian neighbor, Malaysia, which is a middle-income country, who has done remarkably well in transitioning from the use of cash to the use of digital financial services. So low digital literacy, so that is digital financial literacy, but the second one is also digital literacy itself. Low digital literacy also hinders the ability to use and navigate digital technologies. So there has been a survey conducted by the Department of Census and Statistics on digital literacy. So nearly 60% of the population surveyed said they were digitally literate. Of course, the definitions are, you need to know the definition, because how they define someone who's digitally literate is if the person owns a computer, laptop, or smartphone, who can use a computer, laptop, or smartphone on his or her own. So, but despite this high level of digital literacy, the survey goes on to find that there are only about less than 45% of people use these digital devices to search the internet, and only about 18% actually send emails using these devices. So hence, even with access to devices, many lack actually the efficient usage, the skills to actually use these for digital transactions or any kind of digital activity. So that was in terms of financial and digital literacy. If we look at it in terms of what we need in terms of digital infrastructure, there are several areas that we need to focus on. So the one I'll really focus on is in the ICT infrastructure and the payments interface. And when you look at that, what we mean by that is how affordable are these digital devices and the internet. So in Sri Lanka, we find, and the surveys have been done, that the high cost of access to the internet and mobile phones, and here we're talking particularly of smartphones, disproportionately affect low-income earners because they have a large proportion of their income they spend on food or education, basically, and health, and their essentials. So they have less discretionary incomes to spend on these other items. And hence, that gets sort of put aside. And this leads to a widening of this digital divide. Also the high cost, and particularly now in the recent past, the high cost of laptops or other digital devices have also made this, exacerbated this issue in terms of access to digital devices. The central bank has also done some surveys, and there's a National Financial Inclusion Survey, where they found that more than 80% of the population actually owned a mobile phone, but most were feature phones and not smartphones. So again, though they may have phones, again, if you don't have a smartphone, then you are not able to actually do some of the, access some of the services that you need to in terms of financial services. The second part was on the internet itself. Sri Lanka does have a very high network coverage for most of the population, but still there are pockets of areas where there is no internet coverage. And also Sri Lanka suffers in terms of the network performance when you compare with some of our regional peers. So these areas also need to be addressed if we want to move further in terms of digital, expanding digital services. The next area is really looking at digital payments. So there definitely is a sort of correlation between the level of financial inclusion and the degree of informality of economic activity. And the more the usage of cash, there is greater informal activity in the economy. And in Sri Lanka, we find that cash still remains an important mode of payment. And there was a recent study, a survey done by Slatscom and Daraz on the e-commerce sector in Sri Lanka, where they highlighted that in terms of the most preferred payment method for e-commerce, it was basically cash on delivery. So then more than 70% of those who even bought things online preferred to pay by cash. So this is a barrier. So unless we have more digitalization of retail payments, would be necessary for greater financial inclusion and to reduce the use of cash. And this would not only reduce the informality of the economy, but it has other benefits in terms of things like broadening the tax base, formalizing employment, etc. To just highlight this issue a little more, there was a recent study being conducted on the uptake of digital payments in Sri Lanka. And what they highlighted was, even though after the launch of Lanka QR codes almost 3 years ago, while there are about 350,000 merchants who have issued these Lanka QR codes, the total number of transactions that are actually conducted through these QR codes is about half, or a little over half, the number of merchants. So not even one transaction per merchant. So it's very low. And this is something that is going to, and this is very baffling, why there is such a low usage. Hopefully now, because I think UPI has connected with the Lanka QR code, hopefully this will encourage more merchants to actually promote the digital retail payments and also encourage others as well, Sri Lankans also to use these digital payments. So the poster child really in all this is India. And their experience has, in terms of this, in this area, they have grown in leaps and bounds, and one of the main areas is because of the strong, the digital infrastructure that has been created. First, in terms of their digital ID, where they have been able to, they have 1.3 billion people in the Aadhaar system, and they have, through that, basically done something like more than 10 billion e-KYCs have been done because of this Aadhaar, the digital ID that they have. And then the other one is, of course, what I just referred to, the UPI. It has transformed the amount of payments and the amount of transactions that go through the digital transactions because of this UPI that they have, the interoperable payment system that they have. But what I want to focus today, and this is the third part of what this whole India stack, which is what it's called, the digital infrastructure system in India, is this whole thing of data sharing services. So the next stage is really where they're going to create this sort of like an account aggregator network where there'll be financial data sharing. And it'll be like an intermediary to collect and consolidate data from financial institution providers that hold, the personal financial data such as banks, and share that data with those who actually the users, such as lending agencies. And that information will hopefully enable better lending or enable more lending to take place. And particularly, as I think Murtaza mentioned this, because women lack physical assets to access credit. And using this, access to this non-financial digital data on, the transaction history of these women, and it doesn't necessarily have to be only on banking history, but on their usage, on their payments of utility bills, insurance repayments, and things like that. They're able to build up a credit history of women, which will then be used in terms of making these informed decisions on how to lend or to lend to these women. But this requires a collection of gender disaggregated data, so that this data can be used to customize products to meet the needs of women entrepreneurs. And even now, there is a certain amount of disaggregated data being collected, but I don't think banks and financial institutions really are looking at this data. And they too need to use this data to be able to make better business decisions. And I think now when we're going into things like AI, and you need training data, I think it's very important that this disaggregated data is made available, because otherwise it will end up in incorrect decisions being made in terms of female borrowers. Then, of course, we come to the area of the supply side, really. So we have this large network of regulated financial institutions who are regulated by the central bank, Securities Exchange Commission, and insurance regulator, etc. And this has enabled, quite a wide network of financial institutions across the country. And as I said earlier, that has enabled, access to for Sri Lankans to have accounts. However, this has not necessarily translated into the access of suitable credit products or lending products from these formal financial institutions to women, and that's still women entrepreneurs, and that still is a huge barrier due to issues like lack of collateral, discriminatory lending practices, and this lack of and also lack of business networks. And what has that led to? It has basically led to an increasing use of semi-formal and informal mechanisms and institutions for credit, savings, and investments, leading to certain types of exploitative and predatory lending practices. So poor financial literacy leads to poor financial decisions and cycles of debt and poverty, and over-reliance on informal services and borrowing from informal sources. So the recent survey by the UNDP, or the National Citizen Survey, they found that 44% of the population are deprived in the area of debt. And how do they define this deprivation? A household is categorized as deprived if the household has taken a loan to cover basic consumption, education, medical treatments, or have pawned jewelry or sold belongings to meet their basic needs. So you can see that around 44% of the population, which is a large proportion, has been categorized as having been debt deprived or debt vulnerable to debt. And the survey also goes on to find that the largest contributor to multidimensional vulnerability is this the debt status of households. So what we can see is that these gender gaps in financial and digital literacy put women at greater risk of exploitative lending practices, etc. So enhancing financial literacy also, or inclusion, also requires more gender-sensitive regulatory environment, including in areas such as, the discriminatory laws governing property and inheritance rights, but also in terms of, the regulating, or at least having some kind of regulation, regulatory environment for these microfinance and microfinance institutions. So I think recently there was a Microfinance and Regulatory Authority bill which was gazetted, which is supposed to address some of the gaps in the existing legislation. However, I think many issues have been raised with regard to the scope of this legislation, and maybe we can go into that in more detail in the Q&A, because we have someone who's probably more conversant with it on the panel. So just as much as the regulatory authority regulatory environment needs to be conducive, financial inclusion also requires a strong financial consumer protection framework. And here too, the central bank has issued some regulations just last year to ensure that individuals and businesses dealing with financial products and services are treated in a fair and transparent manner to help them to make more informed decisions on their financial activities. But I think the implementation of this is key to addressing this issue. And I think speedy implementation is vital. So to conclude, basically we know that the gains from financial inclusion are enormous. And although several positive steps have been taken to improve Sri Lanka's financial inclusion and digital inclusion, there are still many areas, as I have just highlighted, that need immediate attention. And this basically requires a kind of a multi-stake approach. We need the government to play a pivotal role in establishing this digital infrastructure and driving financial and digital literacy programs, that they be treated as public goods, while also creating an enabling environment through appropriate regulation and strong financial consumer protection. The corporate sector as well should actively contribute by driving innovation and investment in technology, fostering collaborations among financial institutions, technology companies, and startups, and developing user-friendly digital payment solutions. They also need to improve the collection of gender disaggregated data and use this data to develop more tailor-made products for women. And from the social side, I think we all have a responsibility to advocate for these reforms. Thank you very much.
Thank you, Doctor, for that comprehensive presentation on financial inclusion in Sri Lanka. Reminding again, arrangements have been made to break fast for those who are observing Ramadan. Kindly reach out to the Advocata team so they will guide you there. Let's move on to the main segment of the day, the panel discussion. I would now like to invite our esteemed panel to the stage. Firstly, Mr. Sri Kudagama, Assistant Governor for the Central Bank of Sri Lanka. In addition to his role at the Central Bank, Sri Kudagama also serves as a member of the Financial Stability Committee, the National Payments Council, and as an expert panelist for the Payment Devices Frauds Act. Welcome, Mr. Kudagama. Ms. Samadani Kirivandeniya is the Managing Director of the Sanasa International. Ms. Samadani is a seasoned development professional with expertise in cooperative banking, MSME financing, gender diversity, and inclusive governance. She divides her time between leading the Sanasa International Group of Sri Lanka and being a dedicated mother of 2 girls. Welcome, Ms. Kirivandeniya. Our third panelist today is Selina Pires, A social entrepreneur, attorney at law, and founder of Celine, Sri Lanka's top fair trade handloom company. She is also the co-founder of Positive Impact Consultancy and the Institute for Future Creations. Honored with awards like Most Innovative Entrepreneur of the Year 2023, Selena is also a TEDx Colombo alumni and a fair trade ambassador to the World Fair Trade Organization. She remains a steadfast advocate for equitable development, especially for Sri Lankan women. Welcome, Ms. Celine. Finally, we are joined by Oresha Valgampitiya, specialist to the Sri Lanka resident mission at the Asian Development Bank. Oresha is also a member of ACCA UK and the Institute of Chartered Accounts of Sri Lanka. Through her expertise in public financial management and SME development, Oresha makes major contribution to policy development and actively participates in ACCA UK's SME and public sector forums. Welcome, Ms. Oresha. This session will be moderated by Ms. Tusita Valgampitiya. Tusita is currently operates as a transformation catalyst, focusing on supporting businesses and individuals to explore the potential available and creating clear objectives and strategies to achieve them. Her interventions help organizations and its people achieve greater results. She is engaged with the Women's Chamber of Industry and Commerce and supports women in business. Ms. Tusita, welcome. You can see the QR code, you can scan the QR code in the screen to share across your question for the panel. Ms. Tusita, over to you.
Is this working? Can you hear me? Right. Okay, it's lovely to be here. Actually, the topic doesn't need any introduction because Roshan covered it extensively. So we are discussing 2 points here. One is on the financial inclusion and the use of digitalization for financial advancement for men, women, the society as a whole. Now moving into this, I'm coming from Women's Chamber of Industry and Commerce. We're working with entrepreneurs all the time, women entrepreneurs, and 2 problems that they faced. One is access to finance, the other one is access to market. When we talk about access to finance, yes, there are limitations from a service provider point of view, which was highlighted by during the welcome address, because women don't have a collateral. Women don't have so many things that they can kind of move forward and show as like you're dependent on your husband and most of your assets are in the names of the family, and they don't have the freedom to go about and start working on their own businesses the way they would like to. At the same time, we also see at the SME levels, the literacy levels are really lacking, and they don't, some of them, although they claim to run businesses, they don't even maintain basic accounts. So from the chamber point of view, what we also work on is trying to identify and enhance this whole enhancement of the financial literacy among specifically women, so that that can help their businesses to grow, and the economy, obviously the economic participation of women will increase. I mean, we know the numbers, it is dismal, and it has been sliding backwards, not forward, so there's a long way to go. But at the same time, there's no point talking about these things, we need to do something meaningful. Then we're moving into use of digital tools for financial inclusion. That is the best way to go, because that simplifies a lot of processes. However, again, there are limitations, because the access to digital tools, access to digital network, all that also has a lot of hindrances, which Roshan pointed out. But having said that, I think it is changing with the new generation. The Gen Z are digital nomads. They are basically on phones, so their literacy levels are much higher. Hopefully, within the next 10 to 15 years, I think things might change. That's our wish. But however, we still have a large population that we need to engage and kind of guide so that they can move into like a better level and contribute to the economy in a greater way. We have 4 eminent panelists here. The way we would conduct this is each of them will take 3 to 5 minutes for opening remarks, and then we would have questions addressed to them. So let me invite you first for your opening remarks.
Thank you, Tusta. Good evening, everyone. I think first I'd like to start this session with by congratulating Advocata and WPAN for starting this kind of a thing. Because empowerment of women, especially economic empowerment of women and financial inclusion is not something that we have unheard of. It is very often, very different groups of people start talking about that. But we need some sort of a comprehensive and focused approach towards empowerment of women. For the very reasons mentioned by Mr. Jafferji in his welcome address and Dr. Roshan in her opening remarks. Now, the reason being, I think the women should be empowered not because of purely humane or philanthropic reasons, but there should be policy actions towards empowering women for a reason. The reason being, making them empowered, getting their contribution towards the national economy. That should be the way forward. So with that approach, I think there are different stakeholders here. We all see that Roshan was referring to earlier programs they have had earlier. Those are related to land laws, then about workplace law, the labor laws, and things like that. In all these areas, more or less, you can see some sort of discriminatory practices and so on aimed at women. Now, those need to be addressed. Sometimes, in addition to that, succession laws and things like that would have some sort of limitations as far as women are concerned. Interestingly, if you look at the regulatory and legal framework concerning the financial sector, I don't think that you can pinpoint that kind of lacuna there. That is basically applicable to everyone equally. Even all these laws, even other laws, says that where there is a reference to kind of say, he means she, simply, in law, unless the context otherwise requires. In the financial context, there is no otherwise requirement. Always, there is this equal treatment. But unfortunately, what we see in reality is not the same. That is the real issue here as far as the financial sector is concerned. Now, when Roshan was referring to this global financial index, global index data, my colleagues in Central Bank gave me some data this morning. What I saw is that when it comes to access to finance, say, having a bank account, it's 89% among male, 89% among females. Having a credit card, 10% among males, 10% among females. So what's the problem there? You don't see a problem as far as this mere fact is concerned. But when you compare certain other areas, you see a huge difference. That is, especially in digital finance related things. And we can't stop at just ensuring access to finance. Access is more or less not discriminatory. It's there. Then we come to usage of finance. When it comes to usage of finance, there apparently is a huge problem. If you take each index having a debit card, there is a difference between men and women. Percentage of persons having a debit card. When it comes to digital finance related things, there's a huge difference. In fact, there is a kind of a concern that whether even if you are digitally literate, that can be used in financial activities as well. That is there. On top of that, women, I think when I say that when 10% of males have credit cards, 10% of females also have. Because if you have the kind of sophistication to have a credit card, you have that sufficient income at that level, there is no difference between them. But when it comes to certain vulnerable groups, that equality is not there. That is why very often females tend to resort to informal financial institutions and then get trapped in some debt traps sometimes in recovery action, they face kind of inhuman situations. That is where a lot of complaints are coming from. That is where we need to address. I think much of the focus should be in that area. When it comes to that, different stakeholders would have different mandates. For example, the institution I represent, Central Bank, is the country's central bank, and it has no direct role in ensuring financial inclusion or empowering women. But at the same time, we understand that a central bank would not be achieving its objectives unless they look at these things. That is why, even when we were focusing on our objectives in the recent Central Bank Act enacted in September last year, this time there is an empowerment among the powers, duties and functions of the central bank to be responsible for financial inclusion, to contribute to financial inclusion. That is there. So having that in mind, and even before central bank started national financial inclusion strategy with 4 pillars and having the involvement of 20 different stakeholders and having 80 different policy actions. So we are working towards that. So my basic introductory remark is that there is no apparent discrimination as far as the framework is concerned. But there is some sort of a huge issue. There may be some sort of a glass ceiling for women to have real usage of finance. Or even if they have that usage, then the quality of finance, what are they accessing, is really a problem. These are my initial remarks. Probably we can go into details later on.
Thank you very much. Samadhi.
Okay, thank you very much for inviting me for the forum. I think Dr. Roshan presented quite well where the financial landscape is and where the access to finance stands vis-a-vis to the women. My contribution was expected on microfinance and the role of microfinance and the issues related to microfinance and how we can improve the microfinance sector so that women can have better access and have less, controversial kind of situations. So basically it works, right?
Yeah.
Okay. So basically to how better we can ensure that there's inclusivity in the financial sector. But as the introductory remark, I would like to draw my attention to the initial introduction which said that only 30% of women are in the market. And if we want to get this country moving forward, we need to bring them to the market. And one way to bring women into the market is to ensure that there's better financial access so that they can be better economically active and they can engage with the market better. We've been talking about this for almost 2 decades.
Something.
So we've been talking about access to finance, the problems associated with microfinance, not having the correct products, not having the correct accessibility, not reaching women better with correct, for more than 2 decades, I think. And the controversial issues that we are hearing today in Sri Lanka were heard 2 decades ago in Bangladesh. So when we adopted microfinance and we promoted microfinance, we enabled the environment in the banking sector for the commercial banks to go and deliver microfinance. We already knew that the package that we are promoting as microfinance is a very minimalist product, which was one of the array of microfinance products that were available in the world. But we picked the very product which was already creating problems in Bangladesh. And we enabled that product to proliferate in the market, enable so many microfinance organizations to come and deliver this service, and recognize this as the way forward to enable access to the women. And finally, now we are doing the postmortem about why this problem. So I think as a starting point, I would like to put some thoughts that I would like to ask you to open your eyes. One is, if we are trying to pick access to finance as a way to get more women engaged in the market and be more economically active, we have to really look at that statement, right? If women are not economically active, what are they doing? What are they doing? Are we really counting what they are doing? And are we bringing what they are doing as an economically active role that they play? Because if we are thinking of using microfinance or access to finance to engage women to be more active in the economy without looking at what they are doing at the moment and ensuring that the structures are enabling them to freeze, come out from those activities, I think we are going to create yet another social problem in the economy. So that is one thing that I would invite you to look into. The second is, when we are looking at microfinancing, I think one of the biggest issue, am I to answer the first question that you came? No. Okay. So one thing is that most people have recognized maybe 1 decade ago, or immediately after tsunami, when Findex was basically doing the research and CGAP was doing research, there was this idea that access to finance, irrespective of the cost of that finance, irrespective of the interest rate, is an important thing. And we were at a point where we did not agree with it. So we were basically saying access is important, but make sure that you have the correct product and the correct interest rate. We can't enable a market to drive products, whether using digital strategies or networks, other networks, or through banking sector, without being responsible to the final customer who is going to be accessed through these products. So unfortunately, again, after 1 decade, we are saying access is not the only thing that we should be looking at. We should be also looking at the products, relevant products, responsible products, delivered on inclusive and responsible manner. So this is, now when we look at the digital platform again, now first we selected microfinance and thought that microfinance would enable unbanked people to be connected with the market. Therefore, let's get more and more microfinance in the industry so that more and more women and unbanked informal people will be connected with the market. Now we are looking at the digital platform yet again. Another way to reach another untapped group of people. I would like to bring youth also into this segment, because it's not going to be the women. Next problem is going to be youth, if you are not going to get the correct product. So again, I think the third point that I like to bring here is that if you are going to look at digital platforms and see how we can get more digitally digitally literate customers, digitally literate women, digitally literate youth, access these products that we are going to channel through digital platforms, we have to make sure that we ask the question, why? Why are we pushing digital platforms? For whose benefit are we pushing digital platforms? We did not ask this question when we were saying, go full range with microfinance, whether it is commercial way, companies, anybody. Deliver microfinance because it has worked for some people, and there has been research done that microfinance works with unbanked people. Therefore, microfinance is the solution. Now we are saying digital platforms are the solutions. Please ask why. For whom? For whose benefit are we pushing these things? Because if we do not ask this question and only use a channel or a tool thinking that it is going to solve a structural problem in an economy, I think we are going to not be very responsible. So this is what I would like to show as the starting, as the starting.
Thank you so much. Move on to Selena.
Okay, you can hear me. So I'm going to take on from Samadani. I'm here as a user of financial tools, as a second generation. I'm not the founder of Celine. I am the second generation. I'm taking over from my mother who founded the company. So I'm going to unpack that a little bit further, taking on from Samadani. Because when we talk about women's, so we generally talk about this topic around why do we need to enable access to finance for women to empower women. We say that, you know, as a tagline. So let's break that down further. Why do we, in this particular topic, why do we need to empower women with access to finance and access to markets to run their own business? Do we as a country ever take a step back and think, do we want them to only run cottage industries? I would respectfully submit that a large portion of the discussion around women's access to work, women's access to finance, women's access to markets is around the cottage industry. It's around creating women who can just empower their households. I don't think as a nation that should be our kind of ambition. It should be around how can you create access to finance for women to do exactly what men are doing. Run large corporations. To grow as entrepreneurs, simply like MAS started in a little room in Brandix. I have heard stories about how they have started their businesses. How many handful, I mean, I can count the number of women who have been capacitated to build large corporations that way. I mean, that would be my respectful first submission around this discussion, really looking not at only a segment of business in the country, but also looking at women leading medium-scale, large-scale corporation and enabling that kind of finance to come through for grassroots entrepreneurs to reach that scale. Because that is the moment which women can really impact the economy in that sense, because we will no longer be in the informal sector, we will be employing people, we will be exporting product, we will be exporting our services. So I would like this conversation around the women's empowerment in this segment to really think of women as capable of running large-level corporations and building large-level corporations. So that would be number one. So when we talk about SMEs, again we do that mistake. We club MSMEs together. Respectfully, micro is completely different to small. Small is completely different to medium. So when products are created, grants are given into the country, loans are approved to help SMEs without perhaps understanding that MSM is completely different, requires different approaches, different products, different information, different ways of approaching, different ways of being guaranteed. I think fundamentally that product is wrong from the start. So I think that is another point to, as a user, this is what I see. Maybe this is spoken of at a board level in policy discussions, but I don't see that communication as a user of finance and as someone who's running a business at this moment. So, and then the third thing to really unpack also here is that how can some of this finance really enable innovation in this country? Again, women, innovation, does it necessarily go together? No. We don't look at women innovating. We look at youth innovating perhaps, but not women innovating, right? I think fundamentally we need to, as a nation, also understand that it is innovation and different ways of doing things, creating products, social innovations. We need to be able to fuel that. Is the finance available in this country, the products that are coming into this country, able to do that? Debt, equity, grant finances, blended finance, we can talk about all of that as we go on. But I would open by putting these three things on the table and as we continue the discussion. Thank you.
Thank you so much, Celine. Can we now move on to Uresha for your opening remarks?
Thank you for the invitation. So I think this is kind of a critical moment where we have just brought working capital plus some, it's about to sign the loan agreement with the government for the credit guarantee institution also. So if to start with something, ADB has been working for the SME sector from 2016, and from the beginning, even with lack of data, ADB wanted to set targets to address the women needs. So even the credit lines, there was targets, and with the time goes on, we managed to brought in 2018 the V5 program. That's the Women Entrepreneur Finance program, and there we understood the issues in the country, and this is not only the access to finance, we wanted to make sure that the ecosystem is addressed, because just supplying finances won't do. So this has been kind of an approach that ADB has been taken in parallel in discussion with Minister of Finance and Central Bank, and we do have like industry ministry representation. So every stakeholder kind of representation has been there throughout the innovations or the the support that we have been planning. And as you all correctly mentioning, still the access to finance is an issue, financial literacy is an issue, and culturally, on the ground, working with most of the women, which I have understood, most of the micro segment is basically, I can't say it's rather reluctant, but culturally I feel like women at the ground level, especially at the village level, there's a bit kind of a reluctancy to graduate it. So the main thing that there should be a family support. So if we go and see the success stories of this, especially on our V5 grant, which was a blended finance with our ADB loan, there had been ample support from either from the husband or the family, because the courage has to happen, because still at the back of the mind, Sri Lankan woman, it's family devoted. So this has to happen. I think even rather we provide all the things, that's why we don't see a lot of women grooming up to this next level. Other than that, which we have seen financial institution-wise, there's kind of a segregation how they address to the women entrepreneurs, because still some banks address more to the micro segment and some more to the medium and corporate level. So that's why even in ADB programs, what we do, all the banks are in our programs, they have a different outreach, because every segment has to be addressed. And the main thing which we found when we entered and started this V5 program, the banks also need support, because they had to understand the woman, the lending culture, how the women are coming and accessing the finances. So we have 13 financial institutions right now in our program. So we have done all the 13 gender gap assessments. We have given the recommendations and boards has approved. Those who have been proactive have received further supports, especially like developing a special woman-related product. And happy to see, recently I got to know some other multilateral agencies are also approaching, using the same recommendations, and they will support further. So this has been one aspect that we knew, that when we asked from the bank staff officers, the plus point is they are telling women are not defaulting. So the banks understand that the women will pay. Only at the ground level, that cultural, that this training or this communication has to happen, how to lend to a woman. And other than that, what we have found is like continuous financial literacy trainings has to happen, but not only for the same woman entrepreneur. Because we have done gender gap assessment previously for IDB, IT, NEDA. One of the outcome, during the COVID we did it, so with lot of challenges, we couldn't move to the ground. But with the resources, one of the recommendation was to come up with kind of a one platform. So I will later explain, because I think what we are doing, we have to explain. But some women entrepreneurs who are not receiving any kind of additional service still at the village level, at their house. So they are not moving. So it should be kind of a policy and kind of a stakeholder get together and must identify who need required access. It's because when we go to the ground, when we hear some stories from the woman itself, so the amount of capital which they have invested, and now they have become exporters. So the passion is there with the woman, and if the right guidance and kind of right stakeholder combination happens, I think other than this access to finance, they can grow. So I feel access to finance and financial literacy we are always discussing, but all the other aspects, and especially the cultural aspect also has to be, it's not addressed, it should be kind of a communicated in a way where the women can grow into the next level.
Okay, thank you. I think it is very clearly said that there's a lot that has to be done. So let me start the questions asking you. Can you elaborate on the current status and the limitations related to regulatory framework, and specifically if you can address the Microfinance Act and the Consumer Protection Act, some thoughts about it, which can support the financial inclusion of women and protection. What kind of protection is currently available?
Yeah. In fact, I was drawn into this area because of my involvement in consumer protection related recent initiatives. I'll start with what Samadhan mentioned earlier on, that we were talking about same questions even 10 years back. That is a real problem, that the same thing that if we are discussing over a period of 10 years, that's a problem.
Yes.
I think it would be very unfortunate if we have to talk about the same problem in 10 years in future. Now that is what we'll have to address. I think as I mentioned in my earlier remarks, that as far as the law alone is concerned, regulatory framework alone is concerned, there are no kind of barriers as such. Kind of positive barriers are not there. But when it comes to practice, there are a lot of areas which are having some sort of underpinnings in women not getting involved in finance a lot. I think one is that in certain areas where, when it comes to especially vulnerable females, the grassroots level females, access to finance is very often provided by informal sector. When informal sector is not regulated properly, there is some sort of a tendency that they kind of resort to different marketing tactics, kind of unacceptable, unethical and illegal recovery tactics and so on. That has to be, in a way, suitable way, that has to be regulated. There are certain steps being taken towards that. The other thing is, even in relation to regulated financial institutions, Sri Lanka really lacks kind of a very solid consumer protection framework. We had different arrangements, one established by banks, Sri Lanka banks, ombudsman scheme and so on. When it comes to real operational thing, whether there is kind of legal empowerment for that is a question. Now, just because Central Bank of Sri Lanka is the authority responsible for financial system stability, doesn't mean that Central Bank can look into financial market conduct as well. As you all are aware, in certain countries there are prudential market regulator as well as market conduct supervisors as well. In Sri Lanka, there is no specific mandate given to any institution for that market conduct supervision. Now, having seen this gap and having understood that the need for intervening in a suitable way, especially during the COVID period, we established something called Financial Consumer Relations Department, which receives even up to now thousands of complaints. Majority is from vulnerable groups, including women. Now, to address this issue, what we have done is that we have issued I think you mentioned financial consumer relations regulations last year. In August, these are supposed to be come into operation fully in August this year. Part of them came into operation in February this year. Timeline was, the incremental timeline was given so that the institutions can get ready to implement certain measures. Now, these regulations would include some of the things that are really problematic. They would address them. Now, one is this discriminatory practices. If there is any, but we see sometimes this complaint is coming, no financial institution is in a position to have a discriminatory practice towards customers based on ethnicity, religion, caste, anyway, anything, including gender. But it doesn't prevent institutions from giving some affirmative treatments to certain sectors. Meaning that if a financial institution wants to give some special treatment to women, special treatment to some kind of a less privileged community, that is made possible. So that is one way of addressing that. Then again, when it comes to access, that is about access, discrimination cannot also be there in that manner. When it comes to debt recovery methods and so on, there are a lot of restrictions imposed by these regulations. Lot of complaints, informal complaints are such that recovery staff kind of resort to unethical practices. Sometimes their personal life is even kind of challenged due to some practices and so on. All these things can have been reasonably addressed in the regulations. Now it's a question of implementing them. Now this is the real challenging part. The good sign is that I personally got involved in discussions with Sri Lanka Banks Association, Finance Houses Association and other stakeholders. They very honorably, very responsibly, they responded to these things positively. Even though that would increase their costs in a particular way, probably marginally, even in some areas significantly, they were ready to accommodate these things. The response we received from the real operators in the formal sector is encouraging. That's a good news. And then with regard to the unregulated institutions, I think everyone is aware that Microfinance and Credit Regulation Act, the bill was presented recently to the Parliament and it was challenged before the Supreme Court. There's nothing wrong in people challenging the laws if they are kind of having constitutional issues and so on. But in my view, the challenges came not from that angle. Challenges came in from merely violation of equality in the Constitution, saying that why not the banks and other financial institutions come under this regulatory authority. Whether we should submit someone who is under a particular regulatory scheme to something else is problematic. Anyway, Supreme Court apparently has given the determination. Along those lines, the law will be enacted in near future. That would be I think, good landmark in regulating this industry and having some sort of a justifiable treatment towards vulnerable sectors, including women. And if I can continue that, there are so many other things, even in the financial sector, of which we are responsible. Say, finance companies, these are businesses, banks and finance companies, all are businesses. Businesses can thrive and businesses can fail. But our expectations are different. Sometimes when a small finance company has some sort of a problem, maybe a governance problem or some other issue, when it fails, everyone starts saying that, look here, these are not very reliable and things like that. So we need to give some sort of assurance, some sort of a guarantee. It's not a guarantee that no institution is going to fail if they are under regulators, but a guarantee that you have some sort of a comfort even if there is a problem. So this deposit insurance scheme has been now formally legally established, and we are in the near future, in next 2-3 months time, there would be a kind of a serious awareness program to let everyone know that their deposits are guaranteed up to the relevant level. I think the group that we are talking about would be very happy to see that their deposits are protected. No informal sector person is in a position to give that guarantee. That kind of things are there. And when it comes to digital area also, that there are certain conditions. Especially I want to address this issue about not having collateral and banks asking for collateral. Yes, Sri Lanka's banking sector would always love to lend if there is a sufficient collateral. There is no rocket science in giving 100 rupees if you are given a collateral worth of 1,000 rupees. But when it comes to these vulnerable groups, it's a real problem. They don't have that. Always they are in, sometimes they are husband's name or something like that. So we see a lot of female, they are into microfinance and things like, MSMEs and micro businesses, but lending is in the name of the husband and things like that. So that it may be the reason why, even though Sri Lanka's, the women contribute to 51% of the population, apparently in MSMEs, ownership is confined to 25% of the population. 25% of the women, 25% of the MSMEs are owned by women. There again, large majority is in micro area. So to have a different, the kind of a change in the future, since your question is only limited to regulatory challenges and things like that, I would stop there. There are a lot of things, including that, to be done.
Thank you. Selina, I move on to you now. You're an entrepreneur who has braved the challenges in the use of innovative methods, and blended finance is something that you have successfully maneuvered. Can you briefly speak about the innovation at Celine, which has enabled your route to market?
Yeah. So if I can, also conscious of time, if I can answer it this way. So Celine, being a 32-year-old company, has no problem accessing finance. We have banks lining up to give us money, right? But when it comes to crisis, and that's not the case for all women, absolutely not the case for women-led businesses, but perhaps the case for women-led medium-scale businesses, right? So when it came to the crisis and when we were faced with the fact that our traditional product range couldn't really perhaps create the future proofing for our company, and having to pay 300 salaries every month, and having around 500 women depending in an outsourced network on a consistent income every month, we really couldn't take a lot of risk. So the innovations that we did at Celine were both social innovations, and we were really looking at how we can continue that consistent work, but at the same time create a product that was globally accepted. So we've created a reusable pad that is ready for export, also with a donation drive that goes back to resolving kind of the period poverty issue in the country. And also we've created high-value textiles, which pays weavers, artisans, 3 times what they're paying, which is, if the project succeeds, they're looking to earn around 150,000 at home. And really the USP is around bringing blockchain technology to ensure that there's complete sustainability or traceability of the supply chains. Now, how did we fund this? Certainly not from what we had, because we had to protect our capital reserves. Every financial company, every consultant was telling us, be careful, be careful, be careful. And I am one board member in a family board, and a traditional board was saying, you have to be careful. So here comes the opportunity. Grant finance is open to medium-scale enterprises, to small-scale enterprises, but how many of us can access those grants that are available to us? I have 2 master's degrees, and I still had to hire someone to write the grant application. You know, how many of us have access to the English language? I mean, we are talking around big macro issues that prevent women, forget women, from small businesses, medium businesses accessing finance. But English language is actually one of the biggest issues, and bureaucratic forms when it comes to accessing grants, for instance, right? So, I mean, that is really something that we have to just be open about. And also if you move to the next step, so during crisis there was a lot of grants which were simply grants, but now as we come along, and as it should be rightfully, there is always a cost sharing component. So how can SMEs face that challenge when there is, for example, an equal cost sharing component? That is respectfully where some of the solutions and the banks need to step in. What are the kind of the support that can be given to emerging businesses in accessing some of this blended finance, grant finance? So when it comes to debt, I mean, I'm scared to take a massive loan to fund some of the innovations. Those blockchain solutions cost hundreds and thousands of dollars. How can I do that? I can't. Like I said, I have 800 people to pay salaries to every month, right? So it's that fear, especially when it comes to innovation. How can you access a bank when, this is quoting one of the CEOs of one of Sri Lanka's top banks. It's not me, it's him who said, Sri Lanka has some of the laziest bankers. It's lazy banking. Exactly like he said, if you have a collateral of 1,000 for a 100 rupee loan, I would do it too. But what is the system in Sri Lanka to not just prevent bankruptcy, but to make success out of failures? Where is the comfort zone? Our Parata execution laws simply grab and go. How do you take risks? Innovation is risk. How do you do that if all that doesn't change? Right? So I think these are some of the fundamental questions, and don't get me started on the impact investors. Right? It's simply impact investing with very traditional ways of equity financing. People want return, especially when it comes to social innovation. You can't scale, you shouldn't scale in the way that the returns are expected. Because I'll give you an example of our pad. The pad is 300 women can make 100,000 pads a month. A machine can make 100,000 pads in 2 days. So if I bring in impact investors to further my innovation, they're going to tell me, what the hell are you doing getting these women to sew your pads? So is that the kind of money I should access? Should I want to access? Then how do I scale? So just questions. There are answers, but right now I'll stop with the questions.
Okay. Samadhini, so you elaborated on microfinance, and we spoke about this 10 years ago and how it hasn't made the impact it should. Why is it not working? And why is it working in some countries and not in ours? So what is it that we can do?
I have a problem with the question. I don't think it is correct to say that in Sri Lanka microfinance doesn't work.
Okay.
I think certain types of microfinance which draws attention of the headlines of the newspapers that like sensations, which draws people to streets because they cannot otherwise bring people to the street, does not work. But that cannot basically delete the contributions that microfinance has done in Sri Lanka over the last 30, 40 years. I think if microfinance has not worked in Sri Lanka, we wouldn't have been able to create SBB Bank.
Okay.
After 10 years of microfinancing in the country, they were able to create a capital that was able to create a bank in the country. So I think there is a microfinancing that works. The question is whether the regulator recognizes this as a microfinance model that should be studied, that should be researched, that should be promoted, that should be nurtured, right? Or do we want to just pick one model and say that it doesn't work in certain countries, so it worked in certain other countries, and therefore it's either working or not working? So I think the biggest issue in microfinancing, there are two things that I can see. I mean, to answer your question, okay. because I am moving about, right? Okay. So one of the issue I think is, sorry, it's not an issue, but the first answer is that it works. It works, but it is really not a solution, right? The reason why I think we are looking at microfinance and say that, okay, it hasn't delivered what it should have delivered, is because we are looking at microfinance and expecting it to do wonders. We are expecting microfinance as the only tool or the tool that can create enterprises in the country, that can create stability in the poor households, that can enable women to come to the market, that can do many things. Recognizing microfinance as a solution is a problem, I think. So I'm glad that you thought that microfinance is a tool, which is a tool, but if it has to work to deliver intended outcome, which is to reduce poverty, enable access, make inclusivity in the financial landscape, we should place microfinance as a tool in a basket of other tools. And also in a value chain, which is a financial value chain, which is missing in the country. Just as much as many other value chains are missing in the country, financial value chain is missing in the country. So I think one of the reasons why it doesn't work in places where it doesn't work, one is because regulation came very late. We negotiated for microfinance regulation in 2005. When tsunami funds were coming to the country, all the commercial entities knew that there was a lot of money that can come to the country, and if they have a microfinance product, they can access all this funding without having understanding why certain microfinance organizations are doing microfinance. Why it is called microfinancing, not just microcredit. It's not just credit. It's understanding the diverse needs of a group of people who can access only small amounts of finance at a certain time. But that doesn't mean that they should be fixed only with the microfinance, right? Everyone needs to have good access to the finance, and it doesn't have to be micro or macro. Depending on their capabilities, they should be able to access all types of financing, not just, so I think why it hasn't delivered is, it definitely has delivered a lot of profit to the microfinance companies. Therefore, some of them have been able to venture out of the country also. So it clearly has delivered a lot of profit. It has delivered a lot of profit for investors, but it definitely has not delivered the poverty alleviation, focus.
Thank you. Uresha, my next question is to you. Given the exposure that your organization has across countries, how do you relate to the current situation of this country related to this topic? I mean, that is financial literacy as well as digitalization as a financial tool. How do you compare, and what thoughts do you have?
So if we take from access to finance, still if we take across the countries, we do have the issue, but mainly the financial literacy is the main key issue. Because if we take number-wise, even Roshan through her presentation, the numbers were presented. Still, the financial literacy is the key. So that's why the need has to happen from the school curriculum. This knowledge transfer has to happen. And the main other thing which we see is limited number of products, because loan is not the only way of access to finance. So Sri Lanka lack these products, especially even now the Dirisavi board is there through the SEC, and some sort of a comfort is there for the SMEs to groom and limited venture capital funding. So this different type of financial product has to be opened up. So even because we must not talk about this micro level women entrepreneurs, because there are women entrepreneurs who can penetrate to the international market, so they need money. So that type of finance is required, and this should be in an affordable manner. Because what will happen, end of the day, if they have to pay more than the return of the cost of the funds, so how can they give an affordable product, compete with the market? So as a whole, it should be like think in a way that all the women entrepreneurs, different segments need to be addressed. So for those women entrepreneurs, there should be different products. So for an example, that since you asked about the ADB, that because we as the sovereign, we give the loan as per the government priorities, and we especially look into the woman entrepreneur as one of our priority area, and especially now ADB is a climate bank also. So we will look into those areas, and with the discussions with the policy makers, we will lend to the government, and through the governments, we will lend to through the banking network. So that's one scenario, but we do have a separate private sector arm also, and the other segments are still grooming, but it's not only ADB, because we do have a lot of donors, and especially it's high time Sri Lanka to think about other products also. That's why separately we are supporting through the Securities and Exchange Commission also to come up with different products, because this mid-level can be listed at the next graduated level. They can go and find equity funding. They need to issue shares or maybe debentures. So this thinking has to happen to the country. So this is not only the micro segment that we need to be looking into, and that's one of the main difference that we see, because lack of product is the issue in the country, and Sri Lanka didn't have a credit guarantee institution. So with the ADB intervention, the sooner the ADB credit guarantee intervention will become as a separate government and finance institution own institution. So the issue that lack of the collateral will be, it's overnight it won't be settled, but gradually with cautious, this credit guarantee institution has to issue guarantees, and this will solve one of the problems, and we will closely monitor and work with the government to ensure that women entrepreneurs are benefited from this credit guarantee institution also. And the other thing is the financial literacy, plus how the woman entrepreneur goes and presents business proposals. What we have learned through our training programs, especially through the physical training programs, at the last day, because it has been kind of a segregated 5-day training programs, last day, with confidence, this woman entrepreneur goes and present the business proposals to the banks, where there are like multiple banks are presented. So there they learn, it's not only their bank, you are there, but it's your customer can be, go to another bank, then they will start banking, then they start comparison. So that's the competition that woman entrepreneur has to start, because if we take in Sri Lanka, generally everyone stick to the same bank. This competition has to start also. Then there will be competition of product offering also through the financial institution. So these are the kind of things that we see and we look forward to. And other thing is, it's not easy to do, even though financial literacy is an issue, do continuous physical training. And the other thing which we have noticed is in Sri Lanka, multiple partners are doing so much of training, but end of the day, the numbers are not increasing, the financial literacy is not increasing. So that is why we developed this SME Connect, SME platform, and now it has been handed over to NEDA, and most of the partners have now on board. It doesn't mean public and it's both with public and private. So that's one of the solution that we thought, learning from the other countries also, because it's not the same entrepreneur is going and getting the same training. We had doubts, but during the COVID period, when we conducted these online trainings, the stories were very passionate, because they were mentioning with the kid they were learning. During the night they were learning. So there were cases about the financial literacy. For an example, a lady who owned a salon, she was mentioning until she received the training, she has been doing the pricing. If the next door salon is increasing the price, she has been increasing. So these changes are happening. So we have to touch the right women entrepreneurs, and so these changes has been happened in the other countries too. So we hope that it's not a ADB work, because time to come it should be the ownership of the government, and with all the stakeholders we expect that things will have a change.
Okay, thank you. I think there have quite a lot of questions that have come in, so I'm going to stop my questioning. And this is for you actually. Does Sri Lanka have a mechanism to regulate or monitor lending and ethical communications to vulnerable groups, from pawning, gold loans, and what banks as well as other unethical microfinance operators?
I think answer is twofold. Under the existing system, what is available in this relation is the the consumer protection regulation, where this communication issue is addressed. And the other part about lending, there is no law that has kind of regulatory authority over lending business. That is why the Microfinance and Credit Regulatory Act is being introduced. Now, once it is enacted, there would be a regulatory authority, which is a Microfinance and Credit Regulatory Authority, which can look at these things, including lending practices as well as recovery practices, and so on.
Thank you. Samadhi, this is for you. Do you find that the absence of a development bank in the country is contributing towards some of these issues? But you can't say absence, right? Development banks. You can hear.
I'm not really sure whether I should be the one to answer these things, since there are a lot of bankers here. But I definitely think that most of the problems related to financing comes because there is diminishing of development banking perspective in the banking industry. That much I have to say. I have the experience of working in, growing up in a microfinance movement, or it's cooperative financing. My entire life I have seen how the, people in communities get together and form their own financing mechanisms, and how they can get their, problem solved through this. And I saw that movement creating a bank, and I saw the bad regulation killing that bank, the development aspect of that bank, and now it is basically functioning as yet another bank. And I think most of the SME-oriented banks are continuously, moving towards commercial KPIs and risk management mechanisms that are being initiated into the banking industry and forced down into the small banks which are not able to afford that, are pushed to become bigger irrespective of the needs of their clients. Therefore, if we actually look at the local, market, 80% of the people almost are in the informal sector. So these people, most of them are unbanked or, partially banked, not served by the financial, markets. And we need to, and we keep saying, know your customer. But we really, as an industry, I don't know whether we know our customer. So if we know our customer, we would really look at our customer and segment that customers and make sure that these customers are catered through relevant, affordable, consistent, comprehensive package of products. But I don't see that in the banking industry. So unfortunately, we are bringing more and more innovations into the industry. And, I have to say this. When I was in SDB, when SDB was asked to be listed by the regulation, we didn't want to get listed, but we were asked to be listed. We were a bank that was created for the cooperative movement to deliver development products through a network, a robust network of cooperative movement, and we were the apex bank that was creating products with the cooperative banking network, and we were asked to be listed. And when I asked some of the regulatory people at that time, we cannot contest when the license is given to us by the same entity. We cannot contest, but tell me one good reason why we should be listed. The answer was that if all the private sector banks are getting listed, we were the only cooperative owned bank, If all the other private sector banks are listed, you should also get listed.
Okay.
So, I just could not understand the lack of intelligence of that kind of diverse products that if we were not forced to be listed, the bank became very big. It's very good. It's to be fair on SDB currently, it's doing very good work, and it was able to be resilient in the market and become bigger and all that, but it lost the development purpose. And the discussions that we are currently happening is mostly about why cannot this microfinance portfolio of the bank is not being able to create the kind of profits that all the other commercial microfinance entities are creating. But that is because we had a different model. And if the regulator doesn't understand the model, the bankers who come to run these banks do not understand the models, 80% of the people are waiting for such models to deliver the kind of products that are needed to be delivered to them, that bankers who have the patience to actually sit down with different customers, not looking at the poor people as a segment and say, okay, you need these 1, 2, 3 products. But sit with every single poor person who comes to the bank with different needs, different realities, and cater tailor-make products to them, which requires human intervention, not just channels, right? And banks cannot do it because banks are expensive. So that is why you need to recognize that there should be other ranges of financial entities that should be sitting in the market, but working with the bank. Rather than saying, okay, poor people should be catered only by microfinance institutions. No, let them start with microfinance institutions, but make products that can talk with each other so that they can graduate to the development bank, then they can graduate to the commercial bank. But that kind of approach is not there. Instead, we are basically looking at blanket approaches to say, okay, these are the kind of products that should be channeled, and how cost effectively we can deliver this, how less risk way we can deliver it so that there is no shock in the economy. But there definitely is a shock in the economy because economic planning does not understand 80% of the population. So however much we say we know our customer, really my issue is that I'll just pick one thing, financial literacy. We are talking continuously about financial literacy, but I think we are trying to fix the customer instead of fixing the banker, instead of fixing the regulator and the policymaker. I think it's not the financial literacy that is needed, it's the customer intelligence that is missing. And so unless we get that corrected, however, because the people who are sitting in the periphery, who are struggling with so many other issues, now need to know about the banking products. And when they learn about one banking product, they change the platform. And then you have to learn about digital platforms. How much more can a small customer segment learn? Why can't we make it more simpler and more affordable and more user-friendly? So that is why, again, I come back to the question. Every time we are basically asked to do something new in the industry, we should really ask why.
Okay, I think this topic probably can go on for hours, but I think we have a limitation of time. The clock says that it's over, but I'll have just 2 questions, I think, one for Selena and one for you. Okay, we are talking about getting women into become entrepreneurs, kind of giving them the knowledge of financial literacy and digitalization and all that. But do the traditional cultural systems, this is a question that came from the floor, does it prevent a woman from just getting out there like the way you did, while making sure that the rest of the roles are also managed? How difficult is it?
I think Samadani answered my question. I really beg everyone who is working in this sector I implore to kindly understand the customer. I think I'm answering the question indirectly, Tusita. For once, let's look at a model, maybe do it as a pilot, don't do it generally. Look at a model where you can create a value chain where the entrepreneurs on the ground don't have to take the risk. Incentivize and regulate the medium-scale enterprises to, in fact, incubate these entrepreneurs. Let the medium-scale enterprises take the risk. Create value chains, create industries, not just entrepreneurs who are largely in working from homes, right? And to answer your question, I mean, I don't actually want to answer that question because I think in the 21st century, we really need to be able to create a system as a country where women do not need to balance their work and their family life. It is, I think we need to just stop even acknowledging it happens, but we need to move beyond. Let's create those not just success stories of, for example, my mother or now apparently me, of women entrepreneurs who are breaking barriers and it's just a few of us. Let us create a system where genuinely it's the value chain approach. I mean, that's the answer. I'm not giving an idealistic statement here. Look at creating access to finance for industries. Map the value chains. Have the patience to do it. And then reduce the burden and the risk on each point of the value chain. Incentivize those who can take that risk to actually incubate those who want to come up. And that is really the way to do it. Because we talk about export orientation, but how many of us can export? You know, certainly a woman making batik at home, I'm sorry, they can't export. Let's just call it for what it is, right? We're wasting money as a country creating these programs and projects to empower women to export, but I'm just saying batik as an example here, but let's take this seriously, you know? So, yeah, I think I'll finish my submission there.
Right. One last question that is to you. We're talking about lack of financial literacy. Now, would it help if this particular component is part of the education system? And if so, how do we, because right now the curriculum doesn't have that. Unless you're doing commerce, the rest of the people don't get any idea of how to even do basic management of finance. So is there any way that we could...
Let's keep women aside because if I take my friends in school time who are in different professionals, so they themselves mentioned that we don't have the finance literacy. And even that's why even our share market is not very progressive sometimes because they are in different fields. So what we have understood, like even the basic financial literacy should come from the school curriculum. And this advance can be a choice irrespective of male or female. But that's why, for an example, because we did financial literacy trainings for tea smallholders. There that we had the blended finance grant where if you complete the bookkeeping and you have to practice, then the TSHD officers has to verify and give the certificate. This is not for like 1 month or 2 months. So the challenge we had, because we had women targets, and when they go accessing the loan, generally the same issue, the land is owned by, because in Sri Lanka, the land goes from father to son, not to the daughter. That's how it's happening on the ground. We went to the field and from everywhere we found it out. So the challenge how we overcome, so definitely if woman is coming, woman should be a part of the loan. So the banks has to take the joint application, and end of the day, we found like we started with a huge hassle because on the ground we have to convince the government officers because from the beginning, because if the land is owned, so the loan will go to the male, and why you all are doing kind of a woman entrepreneur, not entrepreneur that because they are not registered, but end of the day they are kind of entrepreneurs because they are the ones who are plucking the leaves, sometimes even giving to the the collector's lorry. Because the husband is sometimes doing some other works and earning for the family, and daughter is supporting. It's kind of a family because it's their backyard land. But amazing to see, by the time that when we were completing the training, there were requests from through the TSHD. Some district, totally the training was for women entrepreneurs. So the drive and the passion is there, because it was the simple bookkeeping, not the training that we are giving for this kind of SMEs. So that's why I feel the financial, if the basics are given at the, because I've been a finance professional. I always feel this finance professional, the basic literacy should come from the school. It's not for the finance professional, irrespective all. So this is my personal belief, and that's why even when I'm representing most of the ACCA member forums, we through forums, it's irrespective for Sri Lanka, we try our level best to make sure that this financial literacy goes to the curriculum. And the advanced curriculum should touch with this high capital market, those things. But if we touch these basics, I feel there can be a lot of change, because people won't be afraid of taxes. Because generally people think all the revenue is tax. It's not the tax, it's the profit. Because when a return comes, they have to go for an accountant or kind of someone who submit the return. Then it's an extra cost. But if they have this at the school, that basic learnings, what will happen? They themselves will register. They will submit the return. This is what the woman should, because they have the talent and the knowledge. So this should start somehow with the curriculum change. That's irrespective of whether they are going to be an entrepreneur or whether they are going to be a professional. So end of the day, it will be helpful even for family cash management.
Okay, thank you. I think in the interest of time, we'll have just a very short closing remark from each of the panelists. Over to you.
Thank you. I think we'll need to look at this entire issue in the context and from a policy action point of view. It is not necessary to sensationalize one particular product in the financial markets or financial system, and to give some priority to that. We need to have a kind of a balance between all these things. Say innovation is a must in any industry, especially in this thing, in empowering women. Innovation has a role. If innovation has a cost, we need to balance that cost and see what is the proper balance between innovative moves and the safety of the financial system as a whole and the other things in the society. And also, I would like to address some issues raised by Roshan, this disintegrated data. This morning I was informed that now we are getting disintegrated data under the National Financial Inclusion Strategy initiated by the Central Bank. And also about this not having a proper credit history is a serious problem for women in approaching regulated financial institutions. When even you approach the informal sector, you don't build up a credit history. To that, I think CRIB is in the process of, CRIB is one of the stakeholders in the National Financial Strategy. They are in the process of having alternative sources to build up the database. But I'm afraid to say that I said the same thing about 15 years back. We wanted to collect utility bills and things like that. There were other issues. I mean, I'm not blaming anyone. Say, at home, my telephone bill is in my father's name. Electricity bill is in my grandfather's name. So how can they assess my credit portfolio looking at someone else's name? That kind of infrastructure issues are there. Those need to be addressed. Then about this collateral issue, it's a real reason why women as well as most other unfortunate vulnerable sectors are not getting finance. To that, I mean, in a small scale, but there are some moves from the central bank. For example, when capital adequacy requirements are calculated in terms of regulation, direction number 1 of 2016, there's a less risk weightage given to SME loans, which would include loans to women as well. And again, working capital related loans are being encouraged so that the collateral requirement is minimized. That is one other thing. And also something interesting I want to point out. We complain that digital financial literacy is not there. But there is one other area I worked in recently. That is the widespread pyramid schemes and online lending, unethical, illegal way. When it comes to that, there are a lot of people, including women, getting involved in this kind of things using mobile phones and things like that. Now, so more than the having access to devices, education is a must. Proper discipline in this area. Again, I must say that we need to look at all these things in the context. For example, central bank would have its priorities in mind when looking at these things, institutions and products. Priorities need to be organized in the way so that each of us achieve the given objective. If everyone can do that, I think everyone will be benefited in different ways.
Samadhani? Closing remarks. Okay.
Yeah, it's very difficult to do any closing remark considering the kind of, concepts that we tackled on this platform today. Every, aspect requires almost one day's kind of deliberations to understand why some of these, emotions are coming when we are talking about certain, aspects related to microfinancing or financial literacy or development financing, all these things, because we have talked about this for such a long time. But I think countries in a situation where we absolutely need to go forward, and we have to make sure that our aging population needs to have a stable, last years in their lives, and our younger people to have a future for this country. So if we are really looking at an inclusive financing, using new technologies, using new innovations, what is absolutely must is investors, regulators, practitioners, and if possible, representatives from consumer entities to sit together and define financial landscape, policy kind of a thing. Because what I'm seeing is that we are really doing these discussions in silos. Regulators and investors are in silos, regulators and practitioners are in silos, practitioners and customers are in silos, but we are really not sitting around a table and figure out what would be the financial landscape for this country appropriate for the people. Not appropriate only for investors or few commercial banks, right? Or few, vested other entities. What is appropriate for the country? Where are the people? Like with the financing, what are we trying to create? If it is to create productivity, how are we going to actually make sure that financing is going to enable the productivity in the economy? How are we make sure that people again are not going to collapse because of wrong, selection of sets of tools? So I think we need to really be aware of what we are promoting, and we really need to look at why we are promoting it and who is going to really benefit and who is going to be the victim, right? And I need to really bring the issue of youth again, because maybe women are not necessarily savvy with technology, and therefore we need to do digital knowledge and all these things. But they are not in isolation, right? They have their young people also sitting with them, and there are all kinds of market incentives that are coming through their digital device with very easy credit lines, right? And you have young people who are always with mother's mobiles, and they will make sure that whatever the remaining properties are also going to be provided as collateral in order to get some cheap products out of the market, because they have easy access to digital devices. So we really have to make sure what we are trying to do with these products, because ultimately, yes, products should be channeled in low-cost way, has to be able to access by a large group of people. That is how markets develop. But ultimately, if it is going to create profit only for some investors and digital device owners, at the cost of women and young people in the periphery losing a lot of their assets, I think that is going to be a critical issue. So we really need to quickly get the customer relevant laws put in force. But then the danger is that we will regulate further the registered microfinance deliverers, and then they will also stop delivering credit and put more money into the commercial banks as fixed deposits rather than delivering credit, while the informal sector that is unregulated, I don't see, I'm not really sure, but I don't know whether the bill actually has a way to make sure that unregistered people are controlled. Because most of these issues in relation to the bad financing comes from unregistered people who are not in the radar. So these are some of the closing things I need to say.
Thank you. Over to you. Huh? Yes.
Very fast. I think please don't confine this conversation around access to finance and women to kind of a micro sector. I mean, very bluntly put, don't keep us as working in salons. Don't keep us as making muruku. Don't give us just sewing machines. Like, just don't, right? So I'm being very responsible in what I'm saying because I have seen it, but let's try to figure out how women as a workforce, as entrepreneurs, can contribute to industrial growth in this country. Understand the potential for Sri Lanka's industrial growth, then create products that can incentivize or incubate the value chain from achieving that growth. That is a true way of empowering a woman, right? So I think this is basically the takeaway for me, coming from having been in policy all the way as a practitioner and a business woman on the ground. We really need to move this conversation up because it's high time. Really high time. So thank you very much for everyone's time.
That given all the challenges, that still we do have women entrepreneurs on the ground. So that must be a press thing, because it was not easy. 2019, despite from 2019, still the challenges are there. So that means I feel Sri Lankan women entrepreneurs are much better, stronger than the other countries' women entrepreneurs, because given all the struggle, and they have to make sure that they support the families also. So that's why, despite ADB targets and outputs, we really believe that Sri Lankan entrepreneurs can do a lot of changes. They can contribute to the GDP, and they can get into the value chain, and they can contribute to the economy to come out of the crisis. So just because as from Mr. Kudagama mentioned that the distributed data collection has been started from last year, and so Sri Lankan policy need to be data driven. So we lack SME data, especially on the women entrepreneurs, and right now the central bank is using definition which is comfortable to all the financial institutions. As ADB, sooner we will be supporting the government for the woman entrepreneur definition, because there should be a unique definition where the banks can come and report, where the policymakers can take decisions, and maybe the repetitive customers are detected, and the needed women entrepreneurs are identified. So this will be, most probably we will be starting consultations, and we will start the work soon. Other than that, I hope that the graduated women entrepreneurs will think to go to the next level. And those who are serving, especially by the financial institution, the micro segments, they will look into the women entrepreneurs to look into the next level. Because even financial institution, they have 2 segments. So the micro segment should at least hand over, or they should work in parallel with the women entrepreneurs, because this is not, this cannot be done isolatedly on a silo basis. So mostly the interactions comes with the financial institution. So that's why, that's why we thought that we need to improve the capacity of financial institute on delivering the services to women entrepreneurs. And we will be keep pushing those who are working with us. And end of the day, I think maybe ADB will go out, but all the stakeholders, the policymakers will be supporting, and the drive should come through the woman entrepreneur itself. Those, as you mentioned, those who are at the higher level should inspire and make sure that the new, maybe the younger women entrepreneurs or the startups to be graduated and start the entrepreneurs. So hope that we will come out of the crisis more sooner, and we can see more and more women entrepreneurs in the times to come. So that's our expectation as a country.
Thank you. I think we need to close because we are over time. So sorry about that, but I think this discussion should go on. There is a lot of thought-provoking ideas that were thrown up. This is definitely for you all to take up, because it is a journey that we have to go through, and it is timely that we are discussing these points.
Thank you, Mr. Sirikumar and Ms. Samadani, Ms. Celine, Ms. Suresha, and Ms. Tushita for that fruitful discussion. I would now like to turn your attention to the screen, where you can scan the QR code to access the policy brief on the closing the divide through women's access to finance. We have now come to the close of our International Women's Day event. As always, we'd be happy to hear your feedback and thoughts on both the discussion and the event, which you can share with us by scanning the QR code on the screen as well. Thank you all for joining us this evening and engaging with us in this session. Please make sure to carry on the conversation, taking it forward beyond these doors. As promised, cocktails are available in the adjourned room. We hope to see everyone at another Women's Policy Action Network event. Good night. Thank you all for being here.